Sean Barron is a portfolio manager with Delta Trust and Bank. He's a chartered financial analyst and a certified financial planner. That's a CFA and a CFP to anybody that's kind of keeping score. You got any other acronyms in your title there? That's it? All right. It's good to have you with us, Sean. Thank you for being here. Let's talk about some things that are happening in the larger financial market investment community here. In your business, it's important, almost incumbent, to be able to predict surprises. Let's talk first about some things that aren't really surprising people. You've got this European debt crisis. You've got interest rates that are at historic lows. People talk about they could be rising. You've got the economy in general with all of the different influences that are going on there. What are you kind of concentrating on right now as things that are driving what's happening with people's investments, people's personal portfolios?
And you obviously have a lot of questions from investors and from the world in general. You know, what's going to happen with inflation? What's going to happen with Europe? So I think there's going to be some surprises, but like you say, they are predictable in some sense. Greece will probably leave the euro at some point. The Eurozone will probably join more into a fiscal union, but it's going to be a roller coaster getting there. And then even after that, they still have competitive imbalances within the system, and they can't get rid of them through currency fluctuations. So you're going to need the Spains and the Italys of the world to get more competitive, and that's going to take a process. I think some of the other predictable surprises that we're going to see in the next future is just going to be, I don't think bonds 20 years from now will be considered safe and stocks considered risky. I think that you'll see a little bit of a shift in mindset over that time frame. I could probably go on for a while on this. So.
Well, we don't have enough beer. We don't have enough hours in the day. But let's talk about Europe specifically, because a lot of people that I talk to say, I've got no investments in Europe. I'm not doing anything that is associated with that, yet it is having this huge influence on the U.S. and the world economy. Why is that?
I think it's just the uncertainty. I don't think there's any. I think I think it doesn't drive the U.S. as much as the markets are reacting to it. So you just have uncertainty in it. You're not going to get away from the volatility. There's no way to euro-proof the volatility out of it. You can protect, I believe, risk from loss of principal, and I think you also want to make sure you're liquid, because with all this is going to become some great opportunities. You will have you'll have tremendous opportunities in the future if you're ready to act and willing and have the stomach to do it. I think you can make a lot of money going forward with all the uncertainty. But
when you look at the balance sheets, the income statements of a lot of public companies that are out there right now, and I'm sure this is also reflected in a lot of private companies too, there's a lot of cash sitting on the sidelines, a lot of people holding back where they're going to maybe put some potential investments. Do you see that loosening up sometime in the near future, or do you think that with the current environment and the caution that's out there right now, it's just going to be a continued wait-and-see game?
I think that's a big question, but until you get some more certainty, not only in Washington, but in Europe, and there's so much uncertainty on the macro sense that I think a lot of people are trying to stay liquid and make sure that they have, some capital to apply when it is time. So I think you won't see that until we see some more details come out about what we're going to have in the future.
Do you think that the markets are waiting for the presidential election to come to that conclusion, or do you think that it could continue beyond that?
It'll continue. I mean, the predictable surprise is that we won't have any leader that makes the necessary changes that we really need for the long term. So, it's still going to be an overhang until it's just going to take a long time to work out.
Let's talk about another thing that is out there on the horizon, particularly for people with investments, and that is the Bush-era tax cuts are set to go retro at the end of this year unless there's some sort of extension. What are some scenarios that are out there that, if they are extended, if they're not extended, what are you talking to clients about in terms of positioning themselves right now?
Right. You have, on the higher income earners, you're also going to have a Medicare surtax of about 3.8%. So pulling income into this year could make sense. Pushing your deductions into next year makes sense on the income front. On the capital gains side, people don't like paying that capital gains. They like seeing their statement say 100,000, when in reality, part of that belongs to the government. So I try to reframe it. if, the government is giving you an interest-free loan and you're using your stock as collateral, and they control how much you pay back at some point. So, you've got two uncertainties there. One, the government is participating in some of the risk for you because they have given you that loan, and they will adjust the value of that loan depending on the underlying value of your collateral. They'll go up. If your collateral goes up, they raise the value of that, the principal value of that loan. If your collateral goes down, they'll drop it. The only way to escape that is debt, and then they just excuse the loan completely. But, if I'm sitting there and I have an interest-free loan and I know that somebody else can change the principal amount that I owe them, and I understand that their balance sheet's deteriorating and they're spending more than they make, I don't think that I would like those terms. Right. I think I would go ahead and pay it off and,
right.
and renegotiate somewhere down the road. So
let's shift to another high-profile event. This is a little bit away from our general topic of what's happening with investments, but it is something that I have witnessed that's very interesting to me in the financial market landscape as a whole. High-profile event with Arkansas-based Walmart recently coming under fire for their alleged bribery scandal in Mexico. Right on the heels of that, after their stock took a big dip, then we see it rebound because they had a great first quarter performance. Is it kind of safe to say that the financial markets are going to forgive you if you're winning?
I think a lot of what happens in our industry, you've got two ways to value a company. You value the qualitative and the quantitative. There's so many numbers. There's so much academic data showing you how to value the quantitative that a lot of times I think analysts lean into that very heavily. So yeah, as long as they're performing well, they tend to ignore some of the other things. When we're looking at companies to invest in, I almost always start qualitative. It's always, what do they do? What's their competitive advantage? Do I trust their management? As far as Walmart's value is concerned, I don't even know because I don't like their competitive positioning anymore. They used to have a huge economy of scale advantage on everybody else. They were late to embrace the internet. Amazon kind of got ahead of them in that. They're kind of like where Microsoft was 4 or 5 years ago when when Microsoft first started off, they squashed DOS. They brought out Windows, so they killed their cash cow. They were late to embrace the internet because they didn't want to kill their Windows cash cow. And Microsoft's kind of trying to, Walmart is. Sorry.
All right. Well, Walmart's stock's trading near a 52-week, 5-year high there, so we'll see. That's all the time we got. Sean Barron has been with us. He's with Delta Trust. Thank you so much for your time, your insight. We appreciate you.
Happy Father's Day.
How's it looking out there on the jobs front? One of the most watched monthly reports we monitor is out. The latest on employment and unemployment numbers for Arkansas when we come back. I'm Roby Brock. This is Talk Business.